Hi everyone, good morning. You've tuned in to Buy Now Sell Now right here on ET Now. I'm Mubina Kapasi. With me is Avan Dubash. And Avan, it looks like once again we have a very muted market at hand, just about lower by 0.1%. Sensex also flat.
Yeah, this is a sense of recovery in the markets for sure. The Nifty trading above the 10,650 mark. The broader markets too have paid their losses, but it continues to remain quite precarious still. We're still down by about 0.5%. So looks like consolidation, looks like the fact that it's a negative bias on the markets, that definitely is continuing. But let's run you through some of the top stories, and here are the stocks to keep on your radar. Well, M&M is in focus on the brokerage radar today as Nomura maintains buy with a target at 1,049. They said that the industry should be able to continue to grow at about 8 to 10% over the medium term. Macquarie also is bullish on the stock. They've got an outperform rating with a target at 940, saying that the company has a large global growth opportunity. So clearly, brokerage is upbeat on this stock.
And of course, it's not only that, but a whole host of other stocks as well that we have on our radar. You just, of course, heard out what Macquarie's view was on M&M as well as Nomura, but we also have Lupin and Mylan in the pharma space once again. Lupin finding itself in the news. This after the two companies are going to partner to commercialize etanercept biosimilar. So yes, biosimilars gaining traction after Biocon, and now it's Lupin.
Watch out for Tata Steel. Reports indicate that ThyssenKrupp and Tata Steel are closing in on the deal finally to combine their European steel units. It could perhaps happen according to reports this week itself, and talks in order to hammer out the final details. They seem to be progressing well and on the right path.
And of course, apart from that, we have Fortis, which once again has found itself in the news. This after a probe has found lapses in loans given to the Singh brothers, that's Malvinder as well as Shivinder Singh. And Luthra has concluded that the Singh brothers are the ones to be blamed for the mismanagement found in the company.
Watch out for Bank of Maharashtra. Some details and updates emerging. The MD and CEO has been granted bail by the Pune Sessions Court. So Mr. Marathe has been granted bail on a surety bond of 50,000 rupees.
And finally, IDBI Bank. Remember that we at ET now have been on top of the story of LIC acquiring the controlling stake in the bank, and now it looks like LIC's move to pick up the stake may require certain regulatory changes. We're talking about either the IRDA Act or the LIC Act. Either which ways, IDBI Bank continues to be in the news.
A shaky start to the equity markets, but the intraday chart reveals that there is a definite attempt to see a pullback. So 10,650 being maintained. All those sectors like real estate, finance, IT, infrastructure, they continue to remain in the red. It's auto, metals, and to a certain extent commodities that are seeing a mild pullback. So let's run you through the list of stocks that are managing to gain traction in an otherwise day when you're seeing the bears in control. There's IOC, which has seen some amount of reversal after yesterday's carnage. M&M, clearly on the brokerage radar, is doing well. It's a nice 2% gain on the stock. You've got Infosys, and remember the rupee is continuing to languish. A lot of weakness at a 37-month low, and that is doing wonders for some of these IT stocks. So Wipro too from the large caps giving it company. ONGC, Lupin, HDFC Bank, those are some of the other steady outperformers. But as I said, it's M&M that's firmly in the green. Let's talk a little bit about their investor day notes and what exactly brokerages have to say about the stock. Karanya is here to fill us in. Karanya.
The commentary that they gave at the investor meet is primarily about gaining more market share in the domestic market. They're looking at 50% share as far as the India business goes. They're very bullish on the kind of growth that the tractors and farm equipment sector is actually posting here, and on back of that they are eyeing a bigger chunk of that market. Even talking about their overseas business as far as farm equipment goes, they're very bullish on it. They are looking to expand it in a very big way, and that's why we're looking at a lot of brokerages increasingly betting on this particular stock, giving a buy call and pushing the stock, pushing the rally that it's seeing in trade today. And Nomura has maintained a buy rating with a target of 1,049. They say that the industry should continue to grow at a strong pace of 8 to 10% over the medium term, and given the plans of the company to achieve 50% market share do look very much realistic. They believe that Mahindra can actually go ahead and grab that much market share. New launch, improved focus and better network are key priorities, which will actually augur well for the company if they stay stay focused on all these parameters. DB also has a buy rating with a target of 975. They're positive on the company's near-term performance. New model launches in the SUVs is also something that will augur very well for the company according to them. Lastly, there's Macquarie. They have an outperform rating with a 940 rupees target. They believe that in the global market, the company has a huge opportunity and they should actually look at tapping that potential. The tractor business also in the domestic market, according to them, has high potential, and that's exactly why the stock is buzzing away in trade, because brokerage after brokerage, we're seeing all of them give a thumbs up to the business model and the plans to scale up the farm equipment part of the business.
Okay, Karunya, thanks a lot for that. And M&M is up 2%, one of the top gainers in trade today at about 912 odd rupees. But let's talk about more on the markets then and bring on board our guests who are going to be joining us for the next couple of minutes. We have Manas Jaiswal on the technicals and Ashish Maheshwari of Blue Ocean Strategic Advisors to be with us on the fundamentals. Good morning to both of you gentlemen. Thanks for joining in. Manas, once again, a weak market at hand. We seem to be not moving much at this point of time. We're just, a cut of about 0.1%, but mind you, we have recovered very smartly from the opening lows. So what exactly is your stance on the Nifty?
Yesterday Nifty has already broken the lower band of the channel, and yes, Nifty is moving sideways since morning. It is trading around its 50-day moving average, but I think one should remember that the trend is weak and the possibility is very high that it can again test its previous low of 10,550. So I think any rallies towards 10,680 or maybe 10,700, that would be a great selling opportunity for Nifty. I think Nifty has lot of resistance on high levels in the range of 10,760 to 10,780. So keep your stop loss over there, and on rallies definitely you can create short position and you can set the target of around 10,550.
Okay, that's the call coming in on the frontline index. Meantime, let's get on board Ashish Maheshwari, shall we? And Ashish, would like to get in your thoughts on the index right now. There's a little bit of nervousness in the equity markets, and we clearly seem to be steered by macroeconomic concerns and all that's going on globally. Do you believe that this year we are likely to see a little bit of a muted move on the index? Ashish, your view on the index? Okay, let's just get right back to Manas. And Manas, understand what your top technical recommendations are. Which stocks are you looking at? All three sell recommendations, I see.
Yeah, since I am bearish on the markets, I have three sell recommendations. First is Titan, where the trend is very clear. The stock is making lower tops and lower bottoms from the level of 975. And I think few days back, the stock fell below its 100-day moving average. But today, since stock has already broken an important support of 855, I believe that here you may see some more weakness. Stock can test its 200-day moving average, which is placed near to 810. So here one can create short position with a stop loss of 856. Second is a sell on Shriram Transport Finance, where finally stock has broken its 200-day moving average today, and we've seen lot of volumes over there when it broke its 200-day moving average. So I think here also the trend is weak. The possibility is high that the stock can test almost 1260. So take a short call here and keep the stop loss above 1365. And last one is a sell call on NIT Tech, because NIT Tech was facing lot of resistance on high levels in the range of 1140, 1150 for quite some time. But since today it has broken an important support of 1080 and it is trading below 50-day moving average, I think the possibility is very high that here you may see some correction now. And NIT Tech can test 1020. So take a short call here and keep your stop loss above 1080.
All right, all sell calls coming in from Manas. It's a Titan, Shriram Transport, as well as NIT Tech that Manas has on his radar. But I think we've been able to reconnect with Ashish Maheshwari. Ashish, we have seen significant weakness come by in the markets, lots of factors that can be attributed, but primarily, I guess you've got to look west for this weakness in the equity markets. So how do you see the markets move? And given that it's election year, do you think the markets are just going to drift from here on?
I think election is still not in the agenda for the market right now. I think markets are more influenced with the global and macro factors which we are witnessing, even not in India but in other emerging markets, etc. also. So till the time the crude prices will continue to go up, rupee will continue to show weakness, and trade war related news will keep on coming, I think market will lack any bias towards the upward side. So my view is that for time being, though indices will not show that much weaknesses, but stock specific actions are going to take place, and this we have seen in last 1 month also, that portfolios have really gone down by 7 to 10% if you are holding in mid cap, small cap, but at the same time indices have maintained. So my view is say that indices may not breach 10,400 mark in Nifty, etc. But continuous pressure on mid cap and small cap will be there even in coming time. And we need to closely watch action towards the currency now, because this is very crucial at 69 level. So it affects bottom line of lot of large cap and mid cap companies. So this is very crucial in my view. So as such, I am not very bullish in the short term in this particular segment.
Okay, that's the view coming in on the markets right now, but you've sent us your questions and queries and we're committed to answering them, so let's get straight to it. We have a live caller joining in from Kolkata. Suraj Chaudhary is with us and he's got a question on LIC Housing Finance. Hi there Suraj, welcome to the show. Tell us, what's your question?
Hello.
Hi Suraj, what's your query on LIC Housing?
One sec, ma'am. Just, actually, I was not prepared right now. 1 second, give me.
Take your time. Okay, Mr. Chaudhary, are you ready? What's your question?
Hello.
Yes, what's your query?
Yeah, see, I had 36 share of LIC Housing, bought at the rate of 686.9. Okay. Now it is going down and down every day. I'm finding now what shall I do? Shall I hold it or sell it?
Okay, we'll help you out with that query. In fact, just today, Morgan Stanley came out with a report on LIC Housing, and yes, they too have slashed their target price from 600 to 500 rupees per share. They believe that the valuations have moderated. It's a weak positioning versus some of the other private lenders, although they have an overweight stance. Yes, you are losing out 7,700 rupees already, and a lot of people may be in the same boat. At one time, everyone was very gung-ho and betting on these companies, the overall business model of some of these housing finance companies. What is the overall outlook now, Ashish? Do you believe that it makes sense for an investor like this to wait it out? How are you looking at LIC Housing Finance versus its peers? What about the earnings? What about the valuations? Does it look attractive still?
So the stock has corrected by almost 250 odd rupees from the highs, but still I am not very bullish on LIC Housing Finance and other housing finance companies like Kane Bank and Rapco, etc. And you are not the alone. Many retail investors have caught at the wrong foot in housing finance companies, assuming that the kind of valuation these companies were used to get, they'll continue to derive even for n number of years. Again, the problem is if the real estate segment is not doing that great, and after arrival of RERA, even so many small time builders, they are under tremendous pressure, how these companies will continue to maintain their run rate. Another challenge that's going to come is PSU banks. They are shying away from lending to corporates, and everybody is shifting focus to the retail portfolio built up. So you can't compete with PSU banks and as far as interest rates are concerned. And this we have seen in the last quarter numbers of LIC Housing Finance, that NIM have already started shrinking. So my view is you should exit from LIC Housing Finance, book loss even today, and better switch to a bank like Kotak Bank or Yes Bank, where first of all, there's not too much downside risk. At the same time, you will get more upside in next 1 year to recover your money.
All right, that's the outlook coming in. It's a switch based on the overall fundamentals. Perhaps that's the take that you should look at, you know, given that you're losing out quite a bit. Kotak Bank looks a little bit more attractive with the target price that close to 1,600 for the long haul. LIC Housing, what do you think our investors should do, Manas? You've had a look at the overall chart pattern and it's not been a very encouraging move. As our investor here said, that gradually from the level which he purchased it at 687, those are long gone. What's your advice? What's your technical analysis?
We have seen a lot of underperformance in last 6 months in LIC Housing Finance, and still stock is making lower tops and lower bottoms. Still stock is trading below 100-day moving average. And I feel till the stock is trading below 100-day moving average, any rallies towards 580 to 500, that would be a great exit opportunity from the long position. Because if it downside, if it breaks 460, then I think stock can come in the range of 410 to 400. So here the structure is definitely weak. I think it is better idea to switch from LIC Housing to Dewan Housing, because here the trend is positive. Yes, we saw some correction few months back, but stock took support near 200-day moving average, and the long-term trend is still very much positive. And I still believe that stock has potential to give 15 to 20% returns in next 12 to 15 months time. So I think it is better idea to switch from LIC Housing to DHFL.
All right, there you have it. That's LIC Housing for you. I think both of our experts are advising a sell. And yeah, the stock as well has declined quite a bit in the last, especially in the last 1 odd year. But Mr. Chaudhary, you have one more question on ITC. What is it that you have, purchased? How many shares at what price?
ITC, I'm holding 100 shares at the rate of 338.23. This is also, I'm incurring heavy losses. So kindly advise me, what shall I do now?
Okay, fair enough. All right. So 100 shares bought at 338 rupees. Pull up, what exactly is he doing? What this stock is doing at this point of time? And yeah, losing money over there as well. But ITC, given the fact that its business, more specifically with 60% of its revenues coming from a cigarette business, which is very much which does tend to succumb to the vagaries of government regulations, of taxation regulations as well on cigarettes. ITC wants to now focus and de-risk itself away from the cigarette business and more towards FMCG. The hotels business as well looks very promising now. So let's go across to Manas first. And Manas, on the charts, on the technicals, firstly, how do you see ITC?
See, ITC is moving very much sideways in the range of 290 and 250 for last, I think, 12 months time. And I think that the trend will turn bullish only if it breaks, only if it sustains above 290. However, yes, stock has a lot of support near to 260 and 250. So I think now, because he's losing money, I think he should take a chance. He should hold the stock and keep the strict stop loss below 250. Because if it breaks 250, then next target would be in the range of 220 to 210. So I think strictly he should follow the stop loss of 250 and hold the stock. On the higher side, if it sustains above 290, then definitely you can see some recovery.
Okay, that's the outlook coming in based on the technicals. But Ashish, want to understand your views as well on the overall fundamentals. A lot of brokerages do seem to be bullish, and one says in a market that is sparked with so much volatility, you can cushion the fall in some of these classic defensives. And we no doubt have seen some of these names seriously outperform in an otherwise tempered market. So on ITC, what is your outlook based on how it stacks up versus its peers on the overall earnings trajectory? Do you believe that it's a definite or a blind hold?
No, in my view, this is one of the most underperformer FMCG stock. If you see, even at this point of time, when almost all FMCG stocks are touching near 52-week high, this is the stock which is down by almost 100 rupees from 52-week high. And this is just not because of one or two things. I think multiple factors are there. First of all, their cash cow is the cigarette business. So whatever we say, they earn their maximum money from the cigarette side. And in cigarette business also, because of so many government issues, and new issues are like competition from electric cigarettes, from imported cigarettes, from fake cigarettes coming in the market, etc. So pressure is there on the cigarette business. Another business is a commodity and consumer business, where again I'm not very bullish as such, because they are getting tough competition here from existing players like Parle, Britannia, Nestle, etc. So growth in their earnings is slightly question mark. So my suggestion will be, instead of looking ITC, why don't we look at Dabur, which is almost near at 52-week high, and last 3 quarters we have seen very good numbers from Dabur, and the kind of product line they are having, the kind of leadership position in their consumable FMCG businesses they are having, this will derive even higher valuation in coming time. So my suggestion will be to book loss in ITC and switch to Dabur.
Book the losses in ITC, that's the outlook coming in. There's too many concerns based on the fundamentals according to Ashish, and he believes that there is more opportunity being seen in mid-cap FMCG counter Dabur, so you should perhaps make the switch. It's a call that you need to take. Well, from one heavyweight to another, let's focus in on TCS. We have a query coming in on Involve from Lokesh in Mumbai. He's holding 140 shares of TCS. His price, I don't know the price point, but he asks, is it possible for the stock to reach a target of 2,500 in the short term or not? So TCS is currently trading at about 1843. There was the overall buyback news, but what's aiding some of these stocks right now is definitely the currency weakness. With the rupee languishing at a 19-month low, a lot of these companies are gaining traction. But the question needs to be answered, and Ashish is fairly categorical. I don't know the time frame. He's saying in the short term. Is 2,500 a bit of a long call, you think, or a long shot?
I think it will be quite ambitious target that in short term stock can touch 2,500 mark. But yes, if you can hold this stock for at least 1 year time, you may get this kind of target. Because we have seen prior to their bonus, it was already 2,800, and now again it's almost 1,850. So if you see earlier bonus adjustment to prior bonus, almost 3,700 mark. So gradually it will move up for sure after this buyback. I think 2.5% share will also get extinguished. So over a period of time, TCS is anyway performing well and continue to do well on account of rupee weakness, and the kind of quarterly numbers and the guidelines they are exceeding every quarter. I don't have any doubt the stock may touch even 2,000 rupees mark in next 3 months. But for 2,500 mark, you need to be patient for 12 to 18 months on safer side.
All right. That's TCS for you. Hold is what, Ashish Maheshwari is advising. And mind you, we've seen stellar growth numbers come by. Well, maybe stellar is a bit too ambitious, but yes, definitely there's been a recovery in growth, and TCS has really led that recovery among all the major IT firms. And, it's the proof is in the pudding. The way the stock has rallied in the last 1 odd year, the rally has really accelerated. Manas, his own personal target that he would like to watch out for is 2,500 rupees. But nevertheless, on the charts, how do you see TCS move?
The two large cap IT stocks are looking very strong on the charts. First is Infosys and second is TCS. And I think these two stocks can give around 15 to 20% returns in next 12 to 15 months time. And especially TCS, because I think in the month of January we saw a flag breakout on the weekly chart, and the target of that breakout comes near to 2,300, 2,350. So still, I think stock has a lot of potential. I think definitely he can hold it and keep the stop loss below 1,690. And you can set the target of around 2,300, 2,350 for next 12 to 15 months time.
Okay, there you have it. That, of course, is the view on TCS. I think both of our experts are saying that you can hold on to TCS for some time now. But let's talk about some individual stock strategies then for those investors who want to stay in the equity markets for a longer time horizon. Ashish, tell us, what is it that you'd advise in terms of individual stocks that such investors could bet on?
Yeah, I think this time has come now to look at more large cap stock, or take shelter in the large cap stocks, because mid cap and small cap stocks in my view will take time to recover. So my first pick here is from FMCG pack, this Godrej Consumer. This is, if you see the business model wise, this is one of India's MNC company, because if you see their presence, they are in Africa almost 5 countries, in Latin America they are in around 5 countries, and they are having around 10 plus winning brands also under their umbrella. Good management and concentration on existing product portfolio is their core strength. If we see even their December to March quarterly numbers, there is significant improvement in the profitability which went up by 470 crores to 617 crores. So my view is on safer side, this is going to be one of the largest growing FMCG company if we see overall portfolio. So my expectation is in the next couple of years, they will continue to grow by 18 to 20% on safer side. So this is a stock to watch. In my view, this stock has almost 200 rupees upside from even current valuation if you hold for 1 year time frame with virtually no downside risk. Another stock idea which I like in IT is again Infosys. I think this is one of the most underperformer stock if you see the performance of the peer set, particularly in mid-cap IT segment. But I think those issues which companies was going through for last few years are over now, and now company has started performing under new CEO. And this is a stock like again I'm expecting for next couple of years will continue to meet all the management guidelines, and this tailwind of currency is again positive for them. So my target for this stock is again going to be 1500 mark in 1 year.
Okay, watch out for Infosys getting a thumbs up on the stock with a target price of 1500. Godrej Consumer look to buy the stock for a target of 1400 rupees. Thanks very much, Ashish, for sharing with us those wealth creation ideas, and Manas for joining in with your technical take. Let's move right on, and the long pending probe involving India's largest stock exchange NSE will soon conclude, with market regulator SEBI all set to slap a show cause notice in the case. Let's bring on board my colleague Vijay Iyer, who joins in with all the exclusive details. Vijay, the SEBI chairman recently said that the enforcement action will be taken in the co-location issue. Will a show cause notice be issued this week itself?
Avan, yes, indeed, that is what we are picking up. All indication that show cause notice would be served to NSE and all other stakeholders, including the employees named in the investigation and the brokers in the investigation, perhaps this week, today, or by tomorrow. This would be important because this has been a long-pending investigation. Finally, Ajay Tyagi, after taking over as SEBI chairman in the last 1 year, has taken this investigation on a priority. He said this has to be completed. That is where a couple of forensic audits were being done on the whole of co-location trades conducted by brokers, close to 20 plus brokers. And also SEBI had appointed a technical committee which had submitted its own report. So finally, the investigations have completed, and now the adjudication process will start, and the show cause notice would be issued to NSE, as I said, and other stakeholders. This would be important because clearly there are indications that there was a dereliction of duty on part of NSE, NSE being the first line of regulator as a stock exchange. And indeed, there were a handful of individuals who perhaps colluded with the brokers, thereby giving them co-location and thereby giving them advantage when it comes to place the trades, particularly in the derivative segment. That has been the whole allegation and the investigation all about. But from NSE's perspective, finally, the new management, Vikram Limay, will always wanted to put end to this legacy which has been haunting them for the longest of time. And all indication that perhaps NSE will be penalized, because at the end of the day, SEBI wants to send a strong message that no amount of dereliction from a stock exchange will be tolerated. And what we gather also, perhaps NSE is also wanting to settle this case, and consent would be an option that they would look out. They are ready to pay the penalty because they want to put a close to this. But all indications that perhaps this investigation has concluded and show cause notices will be issued by today or by tomorrow.
Okay, that is the latest with the NSE co-location case. It could perhaps be a case via the consent route as well. Vijay, many thanks for filling us in with all those exclusive details. On that note, let's take a quick break right here on the show. Do stay with us. On the other side, we highlight all of the top stocks to keep on your radar. That's right, Market Fatafat coming up next.